Can you believe the Dallas Mavericks traded Luka Doncic to the Lakers without telling the coach first? After that, did you know the Red Wings beat the Oilers 3-2 Thursday night in overtime shootout? Dennis will want to talk about that. Nope. All seriosity, folks. We're starting in the red again, but we will be calm, cool, and collected once again. And as a group, try to decide if this is the dip to buy again.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders. You got it right on the screen, down 105 handles. 59.63 is where we're trading. The buck getting a boost up 82 cents, coming up on that 110 area, 109.04. Flight to quality, TLT, up 83 cents, 88.59. Oil getting a boost. USO up 147, 79.49. Gold and silver all over the place. GLD was higher, now lower, down a $1.56 and 256.90. Silver ETF, that's in the red by 34 cents, 28.17. And no refuge in Bitcoin. That's down $6,515 at 95,600. Let me bring in Triple D. Triple D, come on here. Come on. I know you've been working hard. And Christian, you come on too. And you know what? I'm going to put my S&P chart up, and I'm going to ask you guys both a question. Dennis, you answer first. On the daily here, will this gap ever be filled?
Probably today. Probably today.
And what will be the catalyst?
Oh, trade talks is going well. So we are now in the market of Trump pumps and Trump dumps. And the only thing that matters is what is coming out of Donald Trump's mouth to the market. That is what matters. Today, it's trade war. But don't forget, he's meeting with Mexico and going to have a talk with Mexico and Canada today. He doesn't like the market being down. He never does. He doesn't say that. He won't say that. He says he doesn't care. He cares. We know he cares from the last administration. He doesn't like when the market's down. It would not surprise me in the least if he says something like, had a very productive call with Canada today, or had a very productive call with Mexico today. Would not surprise me in the least. So I think what we need to be prepared for is a lot more chop and volatility. It's the year of fade, the year of buy the dip and sell the rip. If you weren't selling the rip last week, well, your profits are now gone. Again, am I selling in the hole? We just dropped 200 handles in 2 days on a trade war we knew was coming? Probably not. Is this an overreaction? Hard to say how long the trade war lasts. Certain winners and losers, we're going to go through them too here. Christian, how was your weekend?
Good morning, guys. Good morning. Another quiet overnight session. That's I think that's 2 in a row coming into Monday.
It is.
So we've got a little bit of a pattern going on. I mean, I think that we've got further downside after Friday's headlines, and trade talks are going well.
That's what we think is probably going to happen here eventually. We don't know if that's going to happen today. Maybe he says, no, Canada's not listening, then we're going to go the other way. So, but, we got to give a perspective here. This was not an unknown. We come in this morning and it's like, oh my gosh, what happened? We didn't know this was going to happen. We did know this was going to happen. The market that prices in nothing. The market, say it again, the market that prices in nothing. We knew tariffs were going in Saturday. Did we just think Canada and Mexico were just going to say, oh, thank you very much and not do any retaliatory action? Of course not. But the market doesn't price any of that in. So we get hammered here this morning on a trade war we knew was coming. So, I mean, this market is just ignorant to everything. It's very dumb. Very, very dumb market. So pricing and nothing. I don't remember this ever being the case 10, 15 years ago. I don't know if it's just algos or what has made the market very stupid, but I think like stuff like this would have been priced in 10, 15, 20 years ago. The market would have been like selling off into the trade war. They would have not been making new all-time highs.
Almost on Friday, right? I mean, Friday's action. Like, why did we went to 61, 47, 75. We were within 40 handles of the all-time high on Friday. And I'm just looking there and I'm like, okay, I'll try to short it up. No, stop. I mean, and then it turned. So the market did. I mean, we had an ugly day, ugly reversal in Apple too on Friday. But let me ask Christian. Christian, do you think that we'll fill the gap in the S&Ps, and do you think it's going to be as quick as Dennis says?
Christian's on mute. Christian, he never does that.
No, I'm mute. I was trying to fix the mic. I just heard it was a little bit hot there. Which gap are we referring to?
In the S&Ps.
Today's gap.
Yeah.
Oh, today's gap.
Maybe trade talks are going well right now because we're just popping through 20 handles here on the S&P. Or maybe all the algos listen to pre-market prep and they're like, Denny thinks the trade talks are going to go well today. We better just pop us 20 handles here. Just the volatility we're going to hear. Sorry to interrupt, Christian.
No, it's okay.
He's talking today's gap down.
Yeah, I think by the end of the week, I mean, I think I do. I think this will be short-lived, and it's the art of the deal. And let's hope that the art of the deal is, gets that closes the gap this week.
He always comes in, bull in a china shop. We're gonna do everything here, and then it always like cools off, and then it gets a deal done. It's how he comes in. He comes in hot. You're fired. He comes in hot. So I do think like cooler heads are going to prevail here. I don't think he wants to start a global trade war with everyone. He wants to talk tough. He wants, stuff that he wants. So I do think that deals will be imminent here. I don't think we're going to be looking at a 4 years of like battle between Canada and the USA, who have been best friends. Canada and the U.S. have been best friends. And you think I'm Canadian, We've all been best friends. Love the Americans.
I heard that they're putting a tariff on you, Dennis, and you're not going to be able to come on the show.
Yeah, they could tariff me, and then I can't come on the show. It could happen. I don't think it's going to escalate as much as everybody else thinks it's going to escalate. They're talking, maybe U.S. is going to invade us and make us the 51st state. It's not going to happen. They're not invading us. We're not. I think we just need to cooler heads prevail.
Okay, I agree.
I think cooler heads prevail. I do think there are clear winners and losers here, though. You have to be aware of that, too. And I can clearly go to my filter. I have a filter with 2,000 stocks in it this morning. There's about 25 up. Most of them are oil stocks, but there's some clear outliers that are not oil stocks. One is the steel stocks. Nucor, trading up. U.S. Steel, trading up. Just barely, though. It was way up earlier. It's held back. Cleveland-Cliffs went red. And then Steel Dynamics also trading up here this morning. So you can see, U.S. Steel, like not this company, but STLDNUE, steel made in the USA. That's up this morning. Also interesting, the E in my fade trade has come alive. Etsy, it's come alive here. The reason Etsy's trading higher is crackdown on Temu Alibaba is likely good for Etsy. Likely also good for eBay, which is just slightly red here this morning. But there's a winner for you too here. Etsy's like clear winner, up 3.8% on a day. I didn't see any other headlines. I like the chart. I think it's productive. I agree with that. If you crack down Temu, you crack down Alibaba, probably good for Etsy. So Etsy a clear winner here this morning. So there's a few winners for you. Christian, what are you watching?
I'm watching what crude is doing too, because whatever headlines hit too, crude kind of snapped up and is kind of coming back down. But energy stocks, to your point about steel, energy stocks are also doing pretty decently. There's a pretty decent move this morning in nat gas futures. So the EQT, the AR, those names are up decently. Now, would I chase any of these things into this? No, I wouldn't. Sorry, I'm just looking at what's NatGet. NatGet futures are up about 8.5%, but I'm watching to see if some of these gains can be maintained because energy stocks got really hot for a little while, and then they really cooled the last couple weeks. So I still am looking selectively at some of these energy names, like an EQT, for example. So that's something to watch too. But I think it's very interesting.
Up
What's that?
It's up 2 today. EQT. It's up nicely, up 3%.
What's very interesting too is remember we were in this place last week, but for different reasons, and we talked about, or at least what I was talking about is being like in the eye of this. What stocks are in the eye of the storm? And the eye of the storm last week was Nvidia. This week it's probably going to be more your industrials and like Chipotle and GM and so forth. So I don't need to go after those names, but I can look at some names that are down in sympathy and say like, hey, maybe your cyber stocks, anything like tech that I think, that is down a lot that really doesn't have anything to do like even like a Netflix, like you can't tax streaming, at least last I checked.
Agree.
So that's a little bit of my game plan today is just look for sympathy, because these stocks, everything it's just like we saw last week. It was a shoot first, look later. And that's what's going on this morning too.
I think I agree with, and one thing I just want to add is individual stock news, unless it's like takeover, spin-off, or something like that, isn't really that important on this day. It's the macro driving the bus. So don't worry about the individual stories. But what is also important is to understand there are some stocks that are obviously tariff stocks and some stocks that are going to get hit by tariffs here. The clear loser of this, we did the couple winners there, a couple steel stocks, Etsy winner here today. General Motors is a clear loser. I tried a swing trade on General Motors last week. As soon as he said, no, tariffs are going in Saturday, I sold stock because I'm like, you cannot be long that stock if tariffs are actually going to come in. So I took a 1-point loser on that swing trade. It's down 4 points here this morning, down 7.5%. One of your biggest losers here today. And it's clear why it's the biggest loser, because auto parts, you're putting tariffs. If people aren't from, I'm from the Windsor area, so Windsor, Detroit. So I understand it very well. Windsor, Canada, is the automotive capital of Canada. They go back and forth. Like they literally, like somebody, my banker down in Windsor said indirectly, like 80% of the Windsor economy is related to auto. So I mean, it just worked with the big three. There's his company that just makes specific boxes for auto parts. I mean, there's so much there. But what he also said was, or what people are saying here this morning, is those auto parts that are being made in Windsor go back and forth. Even the ones in Detroit, they go back and forth, sometimes 4 or 5 times across the border before the final automotive assembly is made. If they're going to tariff the part in, tariff it out, and maybe it's just one time, but you just, you get how much, General Motors, and obviously the lot's coming from Mexico. I mean, holy crap. I mean, you think about the auto parts and everything and the assembly coming down there as well. I mean, this is ground zero for tariffs. General Motors gets hit the hardest.
I also heard someone told me that I can get a special deal from you on syrup. I'm not sure if that has any validity to it or not. DDD.com.
Maybe, yeah, we're going to sell our, well, that's what I said, when the imminent invasion's coming, we're going to get our syrup bombs, or maple syrup and throw hockey pucks at you guys, because that's about it. If there's an invasion, we're basically just done, because Canada doesn't have, the army, obviously, in the capacity, but, that's a joke. There's no invasion coming. It's a joke because people take it seriously and say, oh, Dennis thinks it's an invasion. No invasion coming. But I just think we just need, again, there's going to be certain winners and certain losers. So have your list. As much as we had Trump stocks list when he got elected, now have tariff lists. You can clearly see Nucor is a winner. Looks like Etsy's going to be put in the winner category. General Motors and Ford are losers. Some of your other industrials, to Christian's point, are going to be clear losers here. Anything that's obviously imports, to produce, is going to be, a loser here as well. So keep that in mind. Those will move opposite. If we get good talks today, General Motors' stock's going to rally the most because it's down the most. So I'm not saying it's necessarily going to happen. We don't have a crystal ball. Canadian bacon. Yeah, we're going to.
And also, I just want to give a quick shout out to Juanita Robbins. It's her birthday today. Happy birthday to Juanita. But let's go through the winners, because we did the losers, we did some of the winners. Is there I mean, defense stocks? I mean, just because we're going to start a war, we're going to need
No,
stuff to invade Canada? No, not
no, they're
defense
not.
stocks?
No, no, this
No?
isn't a war. So you're reaching too much because it's a trade war. So I would say no to that. We actually, Joel, believe it or not, we went through all the winners. That's all you got.
Is that
2,000
it?
stocks. I'm telling you, there's oil stocks, couple steel stocks, and Etsy. That's what's up. Beck and Dickinson. That's news today. BDX. If you want to talk the winners, that's one other one that's up here today. I do see T-Mobile has actually went green here just now. It's defensive. I was saying this morning AT&T was down. I actually bought some AT&T this morning because I'm like, I don't think AT&T is a victim here of this trade war. Verizon, probably not a victim of this trade war. T-Mobile, probably not a victim of this trade war. So it's not like they're winners, but they're not losers. And maybe that's where the market is today. While I'm safe in AT&T, I like it better. TLT is rallying significantly here too. Let's talk that for a second because people are like, oh, that's a lie detector test, but not so fast. TLT is up for one reason today, and it is flight to safety. So I mean, when you have an interest rate moves that obviously is based on Fed, then you can see the bonds rally. Bonds are rallying this morning because money is coming out of the equity markets. So it's like flight to safety there. It's like, boom, I'll take the 4%, 4.25% yield in TLT right now because I'm not getting crushed in my NVIDIA stock. So this is just flight to safety. So I wouldn't say it's necessarily good for the IWM. Don't think like that. Just because TLT goes up today, there's a different reason for it going up. This is why technical analysis isn't always, you've got to know why is it moving up. It's moving up not because the Fed all of a sudden is thinking, oh, we have to lower rates. It's moving up this morning because it's a flight to safety. That's the difference.
I do have a couple other names that could be potential. They're not showing like
Okay.
any major strength this morning, but something like SIBO that does well with increased volatility. By the
Okay.
way, the VIX is not over 20. I think we're right around 1950 right now. So that'll be something to watch for the day too, is whether the VIX jumps over 20. But I actually like this chart. Whenever I'm looking at some of these things that could be benefits of the headlines on the tape, I also, I check to see if I like the technicals as well. Like the technicals have to would I buy this for other reasons than the headlines? And I like that top right chart where price is just consolidating a little bit over that blue line that Joel's got. So it's not extended or anything like that. So I kind of like that name here too.
Back to losers. Dennis, you're probably not going to be able to get any Miller Lite. Miller beer.
Yeah.
Yeah.
So you're thinking
Yep.
tap?
Yeah. Why don't you talk about the list that you were sent of things
So going
that
around in Canada is like a buy Canadian list here. Like you go around and obviously they're looking at what is produced instead. So alternatives to US because we're going to get tariffs on your products because they're going to be counter tariffs. So they're talking about support Canada, buy Canadian. I was going through the damn list though. I don't have it in front of me here, but I was going through and I'm like, it's literally everything I buy. I'm like, the entire list is just full of stuff that I buy on a regular basis. It's going to be tough. I mean, they're giving you generic alternatives here. Problem is, I don't like the generic stuff as much. Instead of buying Coca-Cola, we buy RC Cola. Well, it doesn't taste as good. So, I mean, yeah, okay, maybe my taste buds are going to suffer, but they're trying to say buy Canada. That's what's going on. I mean, so here we can do this show from a U.S. perspective. We can also talk the Canadian perspective too. I mean, if this tariff war escalates, this is like really bad for Canada, folks. Canada was already teetering on recession. We've already got, housing market that's come down substantially. Canada was not doing great. We've lowered interest rates multiple times trying to get ahead of it here because Canada's been suffering longer here, before this trade war started. If this trade war continues, and I don't think it's going to, I think there is going to get a deal in place. I don't think this is going to be like years and years of trade war. But if it does continue, if I'm wrong, this is very bad news for Canada, folks. Like Canada will suffer substantially because we get so much, from the U.S. And obviously it's our major trade partner, from the energy. We know, the majority of our exports to the U.S. is obviously oil. But I mean, it's a huge part. So, with U.S. as our biggest trade partner, they're our big daddy. I mean, it's going to be really bad for Canada if this trade war continues.
Constellation Brands I saw was getting hit too. I believe that got a downgrade from Piper Sandler as well. So,
And
man,
they're worried about,
yeah,
and I know in the Canadian liquor store, they got signs they're putting up there now. This is Canadian alternatives. So they're like boycotting, instead of buying this, buy Canada, buy Canada. So there's going to be a movement for sure, because we see the headlines, and obviously it's going to cost us jobs if this trade war continues. So there's going to be that movement in Canada. I get it. It's tough. It's tough, as a Canadian here, on this show. It's tough, and I've obviously, I love America. I don't love a trade war with America. So I hope there's going to be a deal, not just for stock market to bounce back. Who cares about the stocks? I just hope it for the Canadian economy. I hope that they can reach a deal.
Do you think? Go ahead, Joel.
No, I was just going to say the Canadian ETF doesn't look that bad.
EWC?
Yeah.
Well, remember, it's full of oil.
Okay.
So oil's not down that much today. So EWC is holding up fairly well. I mean, Canada is oil stocks. When you look, the EWC is probably 35% oil. So oil XLE, last time I looked, is actually up today. So, I mean, it's probably just got to break down what's in the ETF. I've never looked at it specifically, EWC. It's not something I trade actively. But I would imagine it's probably 30% oil stocks, maybe more. And then the big banks in Canada, too. So it's not like it's full of, Canada has Shopify. That's the biggest, Canadian, tech company, but we're not full of tech stocks. We're full of oil stocks. We're full of commodities. Canadian is a commodity-based economy, just so, for people who don't know. It's all lumber, oil, commodities. That's Canada. And that's why it's tough. I mean, you throw these tariffs on, and I think the tariffs on oil are going to be lighter, but I mean, it kind of, when you go at Canada, well, the majority of the entire trade deficit is oil. So, I mean, if you take out oil, the U.S. actually has a trade surplus with Canada because there's so much of, us buying U.S. products. So, I mean, you want oil, you're going to tariff the hell out of oil, you're going to have higher gas prices. So, I mean, that's the trade-off. It's not that simple with Canada. Like Mexico maybe is a little simpler, but and then the fentanyl thing, obviously it's fentanyl.
Yeah,
this is what they say. This isn't a trade war, it's a drug war.
I think with this fentanyl thing, I mean, people are going to get their drugs. I mean, they're going to get their drugs no matter what. So to make this whole thing that it's all coming from Canada, drug addicts are drug addicts, and they're going to find their drugs. If it stops coming from Canada or it stops coming from Mexico, there's plenty of people in the United States that will sell them fentanyl. I mean, it's just a fact, the reality. People will get their drugs. Americans will find their drugs.
I just want to give a fun fact here because there's this, there's literally some people that think we're just a big drug producing country and we're all drug addicts. So here's your fun fact. 43 pounds of fentanyl was seized at the US-Canada border last year. 43 pounds. At the Mexico border, it was 21,100 pounds. That's 99.2% of the seizures happened at the Mexican border, 0.8% at the Canadian border. Just to give you perspective here. The majority of the fentanyl is not coming from Canada, folks. Sorry, it's not. It's coming from Mexico. It's just seizures, it's just math. 99% of the seizures were down at the Mexican border. Not blaming everything on Mexico, like you said, Joel. People are going to get their drugs. But to just say that Canada's a bunch of drug addicts and we're making all this fentanyl to kill all the Americans is absurd. Absurd. Sorry.
Speaking of, just to kind of switch things a little bit with Mexico, one name that's down decently because of avocados is Chipotle. Now Chipotle is going to report earnings this week, and I'm kind of looking at this as maybe a little bit of a buy the dip opportunity. Now, again, that's going back to what I was saying earlier. That is a name that's in the crosshairs, or that's right in the middle of the storm. But I kind of think last week we had I think it was Brinker report earnings.
Yeah.
EAT, a ticker symbol EAT, and which
Yep.
just had a huge move. We also had a really nice reaction with Starbucks last week. So I'm wondering if this trend in like the casual dining, fast food type of stuff is going to continue, and I'm a little bit interested in buying Chipotle on this dip. I'm looking at a level 56 is something that I want to see hold. I don't really
Those
like that.
avocados, they're so
Can I
expensive.
give you a? I have some breaking news on CMG. I tried it. I don't know, maybe 10 years ago, because I like burritos, So on Saturday, I went to get my car washed, and there was a Chipotle across the street, and I go, you know what? Because I said I didn't like it, so I went in. I got a burrito. Okay, this particular store was not very clean, so I almost walked out. How much do you think one burrito and a soda cost me?
$13.
$16.
Oh, but there's no inflation, Joel.
But
There's no
it
inflation.
wasn't very good.
It
So
wasn't
I'm
very
not
good.
going-
You're not a
it
fan.
wasn't, and I don't like Taco Hell either. But I'm telling you, I just not very
Sold?
good. So but everyone else seems to love it. Everyone else seems to love it. But there it is. I went to Chipotle.
What did you get on the burrito? So you got to give first of all you got to give the ingredients that got you up to the $16. What did you put in this burrito?
I guess I shouldn't have put the avocado on there. Just your basic rice, brown rice, tomatoes, lettuce, little sour cream, avocado. I mean, what the hell else are you supposed to put on a burrito?
Let's ask the chat for a minute, guys. Are you bullish on forget about the stock, but the actual restaurant and eating there?
You like the restaurant?
Are people still eating there, or have they found alternatives?
I don't know. I see them pretty busy. I've always liked Chipotle. I think you can't. It's like you can say it's $16, but everywhere you go, you can't eat lunch somewhere for under $10 anymore. It's just gone. Certain spots, maybe some little diner, or if you go to the value menu at McDonald's, maybe. But I mean, it's hard. So I had the Quiznos restaurant. I remember back in 2004 to 2008, Quiznos story, and the subs were awesome. It was a terrible investment, but the subs were awesome. But I can remember, like in Canada, it was like you had to have lunch for under $10, and our combo would come out to like $11, and people would have a $10 bill in their hand, and they're like, "Ew." And they put it back in. I was like, that person's never coming back. And they got to hand me the 20. Well, we're at that point now where as long as your lunch is under 20, it's acceptable. If you go over 20, you're screwed. So I mean, $16 is still acceptable. So I think we're just, I don't think your case of $16 Chipotle is too expensive. I just think we've just accepted that lunch is like 10 to $20 now. It's just where it is. I think that's where we're at.
The chat says I saw some negatives. I probably see more negatives in there too, but I do see some folks saying that they have been in there recently, and yeah, it's okay. I think that's kind of where I am too. I haven't been at Chipotle in a long time.
Me either.
But I'm kind of like inclined to I don't know. Now that everybody's talking about it, I'm like, I could go for lunch for that today.
That's what it is. That's why they have advertising, Christian. Get in your head. What am I going to do for lunch today? Chipotle ad comes on. Oh, I'll eat Chipotle.
I got a chicken bowl. Yeah.
Yeah, it works. Yeah, so Chipotle, I mean, I'm actually long it in the day trading account, which I'm long a lot of bad stocks in the day trading account here today, probably because it reports Tuesday. So you know how I like to buy stocks ahead of reports? That was a terrible strategy over the weekend. I am digging out of a hole because I did not anticipate this bad of a reaction to these trade war. I thought, maybe like General Motors and certain stocks going to hit. I didn't think that they were going to just hammer every tech stock and hammer everything. I do believe it's a bit of an overreaction. But, we have a lot of stocks reporting this week, and maybe we should just talk about that here, guys, because, tonight, Palantir is the big one. That's going to obviously be talked about. We can break down the technical on this in a second, but I'll just give you the list, and you guys can pick what you want to talk about. Tomorrow, AMD and Google report, PayPal, Spotify, Chipotle report, Snapchat. Wednesday's Qualcomm, Uber, Disney, MSTR. Ford reports on Wednesday, ARM Holdings. Thursday's Amazon, Alibaba, Cloudflare, Eli Lilly, Peloton, if you want, little speculative stuff, Pins, Elf. I mean, there's just a ton of stocks reporting this week, a lot of tech stocks. So does earnings, Christian, question to you, does earnings have the potential to take over the, driving the bus for a little while here? Because right now, Trump is completely driving the bus. and all individual stock news taking a back seat. But does earnings start to like come front and center here when we start getting Google's and Amazon's reporting?
I think the potential, just like with the Chipotle that's down, like I would rather be looking at stocks that are down going into this report. I think looking ahead to Google, Google was like, or Alphabet as the young kids call it now. Google was trying to break out again. Like we've seen this name try to break out like 3 or 4 times. So that's another name that I'm looking at this morning too, as maybe just getting involved in that name before. Not holding it to earnings per se, but I like the dip down here in Google down around $200. So, I think that could change things. I mean, because I think there's like 29% of the S&P is reporting this week. So I like the dip that you're getting on some of these names because I do think that that'll be a catalyst. And again, for names that, is Google affected by tariffs? Probably not indirectly, but not directly.
As bad, though.
What's that?
Not directly, not like a General Motors, that's for sure.
Right. So I like the dip that you're getting in some of these names that are going to report this week.
I think so too, Christian. I think we just need to keep in mind the art of the deal, what you were saying before. I mean, he comes in hard, really tough, and everybody's like, oh my God, he's starting a trade war with the world. That's like what media is going to be, that's what they do. They need headlines, right? And it is. I mean, it is at this point in time. We know Trump comes in really hot and then usually gets a deal done. So that's what I've got to think.
It's usually the bark is bigger than the bite.
I think so too. And the bite's pretty hard right now. Don't kid yourself. You're Canadian. This bite is very, very hard. But I do think that cooler heads are going to prevail here. And just imagine, like this is scenario analysis at this point in time. And we got to think about what the next thing is going to be said. We know he's meeting. Imagine he says productive talks with Canada today. How much does the S&P rally if he says that? 550 points? Like right away? Like
that. Yep.
Like that, like in a snap of a fingers. Let's bring Jay into this conversation. He's here early. We love Jay Woods. He's going to have some rational thought here for us too. So let's bring Jay in.
Hey.
CMT for Freedom Capital Markets joining us here on another Manic Monday. Jay, how you doing?
I'm doing all right. How's my sound? It seems a little off. Are we okay?
I think you sound good, but let's get this out of the way first.
All right. Let's do it. Yes.
Oh, man.
Fly, Eagles, fly.
Heading to New Orleans. So,
you're going?
I am going. It's,
wow.
Nice. Bucket list thing. I've missed a few of them. This time I wasn't passing up the opportunity. So I'm not sure I can handle going and then losing, but I don't anticipate that. I think this team is a juggernaut on both sides of the ball. And, who knows? The Chiefs got the script may be written against us. Taylor and Travis may get engaged. I don't know. But if I'm just looking position by position, that quarterback is magical over there. But I think we got them pegged. It's a good football team, but the Philadelphia team is rolling as well.
What's the spread of the game?
Why it's 1.5. The Chiefs are favored 1.5.
Okay,
but tell us from a market perspective how you kind of want the Chiefs to win.
Well, there is that Super Bowl indicator, which used to be very good before 2000, and the AFC messed it up. The Brady era and now the Chief era makes you want to kind of, just put that one to the side. But the one thing that's interesting is when the Chiefs are in the Super Bowl, the market's up an average of 18.5%. When the Chiefs win the Super Bowl, it's about 15.5%. Now, if you think there's any correlation, one, you're out of your mind. And two, you would not be rooting for my Philadelphia Eagles. There's a lot of similarities about the 2018 scenario we're seeing in the market and what's going on with the Eagles this year. I like that I can talk about this. Other networks don't want to talk about fun stats like this. And, the Eagles, when they won their one Super Bowl, they've been there 4 times. The average gain when they're there is 4%. And when they won the one Super Bowl, the market was down 6%. And the week before, which would be this week, and the week after, we were down 11%, January 25th to February 9th of 2018. And what happened? Oh, we started a trade war. This time was China. And now what are we doing again? We're going after our allies, Canada and Mexico. Like, hello. This is a little crazy. But if you are thinking correlation between Trump tariffs, market reaction, and football, then you may want to bet the Philadelphia Eagles this time. Who knows?
All right, let's go right to it. You mentioned it. Tariffs. You've been around. You see that, we got the hint on Friday. You see the impact on the markets. I know you're a technician. I look at the gap and the S&Ps and a lot of other things today. And I asked the gentleman, Christian never answered it. Well, I guess he did. Will that gap ever be filled here? What's your approach here on the market? It was a buy the dip at this level last week. That's what I'll say.
It was, and it's very interesting. Back-to-back Mondays, we're scrambling because there's so much news. I like to ease into my week. We're jumping right in, feet first. Will this dip be filled? I think, the first level you want to watch, which looks like it's going to hit, is that Monday opening. So we got another 80 points down in the S&P 500 to hit it. The thing I didn't like was that reversal on Friday. For those that follow candles, holy God, you want to see that one. And then look at Apple. You're like, oh, Apple's coming back. It broke above the 50-day moving average. Here we go. News was pretty good. And boom, 115. Trump is making headlines. And, this is very different than Trump 1.0. And I've said it. I probably said it to you as well. He's coming in guns a-blazing. That first year, there was a little honeymoon phase. We were up every month this first year in office, 2017. Then 2018, what happened? He brought out the guns. He brought out the tariff. The trade war started, and the market got volatile. We were down 6% for the second year. He's doing this in his first year. This has got the market on edge, but how much is it going to fall? I'm a little, happy to see that we are off the lows from last night. If you guys were watching, and I'm sure you were, at 6 o'clock last night when the futures open, Russell was down 4%, NASDAQ and S&P down over 2%. We've come off those lows, so things have stabilized, but you just got to keep watching the headlines that come out of this guy. He's going to meet with Trudeau. He's going to meet with the Mexican leader, Claudia Sheinbaum. We'll see what comes out of this. This is the way he negotiates. But at the end of the day, he takes the stock market as a scorecard. So if he sees this really having repercussions, he may pull the rhetoric back a little bit. And as far as the tariffs go, the Canadian ones just really make me scratch my head as far as partnerships go. And then he scaled back the oil from 25 to 10, and they're going to negotiate again today. Seasonally, if you're going to throw tariffs on oil, this is probably the time to do it. So we'll see how long it lasts. Mexico, that's going to hit the consumer right away. Most of our produce comes from south of the border. So, yeah, and I know we like to talk about avocados and Chipotle, and they've been getting hit. But, just regular produce. And then one thing I learned is Canada, we get poultry and eggs. These are two hot button topics with the American consumer. So let's see what kind of pushback we get, because that impact will be felt immediately when you go to your grocery store. As far as stocks go, we've seen impacts. We've seen the autos get crushed. General Motors, punch up GM. Had a great. You guys are so good. This is why I love coming on this show. I don't have to give you a chart. We just
ready. We're ready.
Yeah, GM had that gap on earnings, and the earnings were solid, but the guidance was too. But there was one problem with the guidance. They didn't put into account any tariffs on Mexico, Canada, and that will impact them. So are we overreacting right now with GM? Can it get back and hold that $50 level? I would buy it on a rally, but I wouldn't buy this dip. I'm seeing too many stocks now. NVIDIA, here's her poster child. I mean, It's not involved in the tariffs right now, but you look at price action that is changed and that is broken. I still believe in this long term. Don't get me wrong, but when you look at a short-term chart, we had that gap. It looked like we wanted to fill. We got back up to 128. Why was that important? That was old support. It became resistance. We went back down below the 200-day moving average, and now we're trending lower. This is concerning. Now you want to, as somebody that may never have been in the stock, you're looking for an opportunity. You may want to put in some lower bids, 108, 10. I'm looking at your charts. Yeah, like 106, 192 was the low on August 5th, intraday. Just in case things get a little out of control and we get that little whoosh down. But right now, price action is kind of scary. And while I did call for a 10% correction back on December 27th, and we got 7 in the NASDAQ, 7 in the Dow, 5 in the S&P intraday, it's still not off the table, but we'll see. Today is going to be very interesting to watch. And for you active traders, Christian, I know, and Dennis, Joel, you guys are going to have a fun day. Just, just be careful and have some low ball bids in there. And I like to buy strength. I'm a buy stop kind of guy when I was back in my day trading days. And I would wait for things to shake out and then buy when we get back to levels that, world support, maybe resistance, and we get back into that range. So there's a lot of things to look at. But, we got to buckle up. It's going to be a bumpy ride.
Hey Jay, I was going to just ask you, and by the way, and good luck to your birds this
Thank
weekend.
you.
Even though I'm a Giants fan, I will
thank you for
be.
Saquon. I appreciate him.
Yeah, no problem.
Unlike you guys, yeah,
the biggest gift of all, the gift that keeps on giving, I should say.
Sure.
I was going to ask you too, because I know that you do a wonderful job at looking for relative strength and so forth. We were also talking about names that might be a little bit less affected and names that are, it's the shoot first, look later. Is there anything, do you have a list, or are you watching some names that have been acting a bit better, or what's on your list today of things?
Yeah, well, I'm looking at the stocks that you guys mentioned earlier in the show. Constellation Brands, the stock is already down roughly 20%. You want to look at levels. It looks awful. I mean, we had a total breakdown, a gap lower, an ascending triangle. So it's a continuation pattern in a downtrend. And now it looks like it's gapping again. This is a pretty historic move. So for the traders out there, if you want to try to play this, I think it's gapping another $10 to 170 in the pre-market. If you do a Fibonacci retracement level from the COVID low to the high, we're looking at a 61.8% level of around 168 to 170. I know I'm throwing stuff at you quickly and you're responding. This is amazing. So I think this may be that puking out scenario where it's, buy the rumor, sell the news. It's in this case, people are selling the news, and you may want to buy this on a dip for a quick trade. So those are the kinds of stocks I'm looking at, like GM. Interesting, it's breaking down, and then I'm focused on what we should all be focused on, which is earnings. You talked about two of my favorite stocks before I came on, Google and Amazon. These things are beautiful. If you're a technician, and I just started teaching, and these are charts that I use as, hey, classics, cup and handle bottom, saucer bottom, continuation patterns to the upside. When you look at it on a daily basis, which just broke out above 200, and you look at Google and Amazon on a longer term basis, you've got beautiful setups. And then what do you want to do? Let's put the fundamental story behind it. Let's see what happens. To me, when I go into earnings on powerful stocks like this, I'm long them. I put them away. I'm trying not to follow them every day. I still believe in them. I still use them. I still know them. And nothing is changing the fundamental story. But if you're trading it, I look at a couple opportunities where you want to buy it. You want to buy it on a rip, a gap up. But, at this point, I don't know how much it's going to run, but my upside targets in Google at least are 215 and 230 based on the targeting out of this recent break and then the longer term cup and handle. So there's room to run, but I think we may get to a point where it tires. But these are names for a long-term investor, which I know this audience is more short-term focused. These are names you just want to be in and put away. And then you look at the fundamental story, and for Google, it's cloud. That's what killed Microsoft. You want to look at it. Okay, let's put up Microsoft on a long-term basis. That could be one of the longest broadening tops we've seen, or it could be one of the longest bases before we break out again. If you bought Microsoft a year ago today, congratulations, you're about even. But here's a stock, fundamentally, the cloud growth killed it. And what's helping Google? Cloud growth, AI story. The AI spend is there. They're seeing results. Why is Meta continuing to do well? They're starting to see results. Microsoft has not really shown people. So to me, this is one you just keep an eye on because it could break down, and that could lead to another leg lower in the XLK, which got hit, the IGV, which Microsoft's a big part of. But the IGV, I know I'm throwing symbols at you fast and furious. You're keeping up. The IGV is one that I've watched closely. That monthly, my God, that's what attracted me to it and made me say it was one of my favorite sectors for 2025. I stand by that. But when you break it down, it's hit or misses in that top 10, where you do have Microsoft, you have Oracle, which I like, you have Salesforce, which I like. But there are some names like Adobe, which looks like trash on a chart. Talk about gaps, talk about island reversal. I'm seeing all the things I'm teaching my kids in class, so I'm just I'm watching the charts and throwing out some patterns here. Look at Adobe. This one on every time frame, it just looks like an avoid. We've had a series of, we had a gap low where we tried to fill the gap, we failed. Gap, if you go back in time, there was a nice diamond. In fact, you could probably draw that on the monthly as well. You don't see diamond formations too often, and it's very rare I point them out. But I saw this one December 9th, give or take a day, the week before its last earnings. And when you see a diamond formation and you break down from that, the downside target here is another 100 points lower. Well, it's 25%. Okay, 25% lower. You say 100 points, it sounds dramatic. Just like they'll talk in Dow points today, guys. We're going to hear about the Dow down over 500 points. Well,
sounds better.
It does.
Sounds
it makes
scarier.
Dennis, we've been doing this a while. We know what sounds better. Oh my God, the Dow was down 800 points. Holy crap! The S&P was down 1%. We're still, pretty healthy from a breadth perspective. I'm looking at 59% of the stocks in the S&P 500 are above their 200-day moving average. Not where we were a couple months ago, but still relatively healthy. Channel me in here, guys. I'm all over the place, as you know.
No, but just to sum it all up, you're not making me feel all excited about coming here buying the dip. You're telling me a lot of these charts don't look that fantastic, and then we're in the middle of a trade war.
Well, and this is as cliche as it gets, and I cringe when I say it, but it's a stock picker's market, and not every stock in every sector is moving the way they did. I mean, the tide lifted boats in most sectors, and now we're seeing selectivity. We haven't even touched on what DeepSeek's ramifications are in the utility sector, and seeing what I think are some opportunities there. Aqua is one that I've been following closely. I mean, I don't know if they're technically a utility just yet. They plan on being one, but they still have to get some approvals and whatnot. But talk about volatile stocks, but stocks that look fantastic on the charts. This one, I don't know if we could show a monthly. It's not enough real information there, but that daily is just tremendous. You had a nice little rally. We flagged, we rallied again, we went sideways for a while, we broke out to the upside, held moving averages. We got a little too extended, we flagged, guess what? Old resistance becomes support, and now we're possibly making a double top. But this is one to keep an eye on a dip as well, because it may go 30 to 40 for a little while. But these stocks that were high flyers are resting, and if you believe in them,
Jay, you mentioned you mentioned that earnings are probably is going to be in the forefront as well this week, and I kind of like a little bit that we're getting all the tariff headlines and so forth, and earnings are kind of going to the back burner just for a quick second. But is there anything that you're watching this week in terms of reports, and do you trade earnings, or do you you mentioned this week and how you normally start a Monday, you kind of let things settle in, which I like too, because sometimes these weeks can have different personalities. But being that we're seeing like this type of separation, do you normally trade some of these names for earnings? Do you think that this is an opportunity, or do you kind of let the name report earnings settle in, and then you kind of pay more closer to attention?
Yeah, Christian, that's a great question. I don't. So just for my background, for 28 years before I started analyzing markets more, I'm trading less, which I miss. That's why when I watch you guys, I get all amped and I want to just jump in and start trading a little more aggressively. But earnings, as a market maker, always came in flat because you never know what's going to make or break. You never know what's going to be said on that conference call. So what I do is I study all the stocks that have earnings and look for levels. Do I want to buy a breakout or do I want to fade it? That is how I set myself into earnings. And you don't want to have to play. You don't play everything, but you want to see where, okay, if we're in a consolidation, we break out, and does this one have something to reverse? If it has something to reverse, you're going to see more momentum into a name, and you buy it, and then you put your stops at levels after that gap. So to me, it's basically doing the homework and letting the earnings kind of dictate where I go. But there are certain stocks, like I look at Google, I look at Amazon. I'm not going to change and get out of these stocks. Nothing's changed my narrative. Apple earnings, I probably would have gotten hurt on that reversal on Friday because I would have bought the rally up. And, as like a Brian Shannon, who's a good friend of all of ours, you would buy that gap up and then you would sell a little and try to lock in some of that profit. But a third of that I would have let run and probably been stopped out for a little bit of a loss by the end of the day. So each situation is different. I try to look at it more on a week by week, quarterly basis now as an analyst. But when I come on your show, it gets me back to what I used to do. And I really get excited when I see, 1-day reversal patterns, 3-day reversal patterns in some of these candlesticks where I think there's actionable activity. Let's look at Uber. Let's talk about Uber, because here's an example of a stock that has earnings later this week. It's been beaten down, and we have a series of gaps. Now, if you punch it up, there's a gap in October, and that gap coincides with Tesla's event. So there's always news with these gaps. And the stock broke out, made new highs. I would have, bought that gap and rode it a little bit. And then what did it do? It flagged. So the gap in October was caused by Tesla's autonomous driving event that kind of hit the skids, did not bring out what people thought would be, hey, we've got autonomous driving. People forget about another company that has 10 cities where there's autonomous driving. It's called Waymo. And guess what? That gap down was, hi, Waymo, we're here. We just went into 2 different cities. I think it was Vegas and was it San Diego? Maybe it was Miami, I think. I don't know. But we keep seeing moves based on autonomous driving. But what I look at are the trends. And what I see going from August to October back to November is a nice head and shoulders top with 67 as your neckline, 87 as your top. And that's a 20% downside or 20-point downside from 67. So I think this one is broken until proven otherwise. To me, we have to get above the 200-day moving average, close above the 200-day moving average before I give an all clear in jumping into Uber. But I think the downside risk is a little more, favorable to the bears than it would be to the bulls in this situation. We did have a nice 3-candle reversal over the last 3 days. That's healthy. But if they miss or if they have any warning, I have a feeling this is going to be one of those stocks where they really punish. So
Jay, before I let you go, I just fundamentals, earnings.
Yeah.
If all this goes through, this is going to be a significant hit to earnings, right?
Yeah.
Also,
it could.
Also, it's inflationary,
Yes.
right?
Okay.
So, do you think maybe this is just a longer-term move by Trump to push the Fed's hand a little bit with interest rates?
Well, I don't know if it's push to move the Fed. We're causing inflation. That's not what we need to see. We're laying off government workers. Unemployment's going to tick up. This is not what the Fed dual mandate is. But he's just going to push the Fed, period. And, his inflationary tactics are not going to be the way the Fed needs to be pushed right now. If we're looking to keep rates where they are, if not lower them, we're getting okay numbers. The trend has stopped going down, but it's stabilizing. And then when you look at unemployment, historically low area, this is still pretty solid. When you look at inflation, we're stuck. It's sticky, and now he's going to throw some more glue into the gears with these. It's going to hit the consumer. Now the question is, how short term is it? Because Trump is saying it's short term. He's going to watch the market. It could be as short term as lunchtime right now, because they could have, they could have a talk. He's using this because of fentanyl and the border. All right, he is not using this because we really need to incite a trade war with two of our biggest allies. So I don't know. And when people push back, when the public pushes back, Trump does listen. He likes to get reaction. And one, the market talks to him very loudly. And two, if people all of a sudden, his approval ratings start to go down quickly, that will stem the tide, and he will probably ease back on some of this rhetoric. We'll see. To me, China's the X card, because China will have more of a deeper impact, because that will set a domino with the European Union and what goes on there. Because if we have more tariffs with our country than Europe, who just did cut their rates, by the way, they may see productivity and imports get cheaper over there from the China side of things, and that's not good for us. So,
all right, Jay, we're coming up here on the top of the hour. Jay Wood, CMT, Chief Global Strategist at Freedom Capital Markets, also an adjunct professor at Fordham University. I hope you're an easy grader, Jay. Thank you for joining us here on Pre-Market Prep. We'll dial you up again next month.
Thanks, guys.
Thanks, Jay. Good luck to your Eagles, too. I say that with a very... I don't know what kind of voice.
Tongue-in-cheek.
I'm not happy. Yeah,
okay.
I'm not
happy. All right. So, Dennis.
The elephant in the room, and they all want to know what I think about Tesla. Chat's been asking multiple times, multiple people asking Tesla thoughts here. I'm surprised holding up as well as it is. I'll say that. Because, what the biggest risk for the Tesla bull thesis is what Musk says. It's Musk's political views. It's Musk pissing people off. He continues to piss a lot of people off. Canada hates Musk now. They're talking about a 100% tariff coming on Tesla, talking about ripping up the Starlink contract. Like, Canada absolutely hates Elon Musk at this point in time. At a certain point in time, if he continues to rah-rah America and that's it, the rest of the world is not going to be as pleased by Tesla vehicles. We have to consider, all information when we make investments and new information that comes in. Tesla's still the biggest position in the long-term portfolio. Am I going to lighten it up? I don't know. If he keeps shooting off his mouth here, you may have to lighten it up. I do think what they're working on is amazing. I do think humanoids are going to change the world. I do think FSD is going to be awesome. He needs to just be keep his mouth shut for a little bit, because wow, it was at first, Democratic voters, a lot of them aren't buying Teslas, and then a lot of other people aren't buying Teslas. Now you're cutting off countries that don't want to buy Teslas. So at a certain point in time, you got to say, man, yes, we are an AI company, but right now our main business is cars. I mean, the numbers were not great, probably because Elon Musk continues to talk too much. This is why CEOs of public companies aren't very vocal with their political views. They're not very vocal on stuff because they don't want to cut off certain buyers. Musk doesn't care. Biggest risk for the Tesla CEO or for the Tesla bull thesis is Elon Musk talking too much. That is happening here, folks. That is happening. Part of me wants to dump a lot of my Tesla, ring the register. It's been a fantastic trade. I'm up over 1,000 or up over 100% on it in 6 months. It's been fantastic. But I don't want to sell it all. I do think there is still a huge bull thesis here. But if he continues to talk, man, he is killing his own company by doing this. He needs to just cool off with all the rhetoric and all the talk.
That's not happening, Dennis. That's not happening. It's going in the opposite direction.
I know it is. It really is.
I mean, you got to look at Yep.
Canada is literally, and not that they sell a lot of Teslas to Canadians, but there's a lot of them on the roads up here. I mean, you get every Canadian saying, nope, never buying a Tesla again now. It's not good for the stocks, folks. I'm absolutely flabbergasted. It's only down 15 points here right now. So I would think, it would be down a lot more than that. So I'm actually pleased with my Tesla position that it's only down that much, considering selling some at the open. Again, this stock bounces back better than any of them. So you got to consider that too. So he's obviously talked a lot. So I've like mixed emotions here on this right now. I love where the company is going. I hate what Elon Musk continues to say in the media and continues to say everywhere. Christian, technicals on
Christian's got
Tesla.
some technicals, and then
Talk to me. What do I do?
I got a major level for you, Dennis. I got a
Okay,
major
Joel,
level
give
for
it to me.
All right. I'm moving up. I said the Bulls were in control until they took out 373. I'm saying the Bulls got to defend 384 today. Multiple lows in that area. And then also it coincides with the pre-market low. So that's what I'm looking at. 384 must hold today. I don't know about, if it breaks into their day, it's one thing, but it has to stay above 384. Christian, let's see your charts.
All right, hold on. Here we go. So yeah, Tesla odds in 3. There it is. That's the range from last week. So definitely watching 388. A couple names that I'm watching that I haven't mentioned too. I don't know if anybody has seen what IT services has been doing. This is ACN, for example, is an IT services company. So I'm long this name. This is a name. So I've got names that I want to kind of add to today. ACN is one of them, but I also just wanted to, there's a couple names. I'd always like to find a little bit of obscure stuff. But I do think that there's something going on in IT services, because this is a name that you probably don't trade that much, but this is called IT. This is called Gartner. This is a name that's going to report earnings this week, and I think this one could be a breakout candidate. Also, CTSH. This is also T company. This is Cognizant. Also very, very strong last week. And again, doesn't have anything to really do. I don't think you can really tariff these companies right now. So this is a group that I'm watching. Yeah, this is a group that I'm watching. I'm also watching Interactive Brokers. This is a name also I got long last week. Happy to buy the dip in this one too. I think that trading, and I mentioned SIBO earlier, watching, and I already talked about Netflix for a short-term trade I'm watching too. So those are a couple things that I'm watching. There's one other name too that I was going to mention. CrowdStrike. CrowdStrike. I'm looking at this one too. This one had a real nice move last week, so I like the dip, provided that it can hold 383. So that's a couple names that I'm watching. That I'm watching as we get into the beginning of the week.
Okay. All right.
One consideration here with Interactive Brokers Robinhood is we didn't really talk about the crypto crash. We had a crypto, Ethereum at one point in time was down 33%. I don't know where it is now. It's down significantly though. Bitcoin obviously down significantly here today too, 7 or 5 or 6% here as well. I mean, obviously, this hits Robinhood directly. You can see why Robinhood's down 6%. IBKR not as much crypto trading action, but they do have it as well. So, I mean, consider that too. Market sell-offs are always, a consideration. But honestly, IBKR is just an unbelievable company. I trade there. It's just, the platform's awesome. Everything about the way, Petterfees run that company is just fantastic.
Okay, 9:03. Ryan Dietrich, Statman Do will be joining us tomorrow. As far as market, I think it's been a pretty tame pre-market. Jay put this in the chat at the beginning. We're back at last week's low. Last week's low, it was a glowback slow. We never saw it during the day. 59.48, 59.35 and a half. That's your current pre-market low. Look at your lows in your stocks from last week. They find support ahead of it. That means people are buying the dip on it. Boy, oh boy, I see the gap, and I'd really love to see us have one of these rip-roaring rallies and repeat last Monday and just get right back up. But unless we get a Trump tweet, I don't feel it in these old bones. So it's
hard to bet against the buy the dip mentality, though. It's out there. We saw it last week. This is not a new. So again, this is not new information, folks. This trade war did not come out of nowhere. This trade war, I think Christian just left, but he's got to get going. But this trade war did not come out of nowhere. We knew this was coming. So it's absolutely shocking, more so, that the S&P rallied as much as it did last week. But new information is going to continue to come. Trump dumps and pumps are going to continue for the foreseeable future. So, and to Jay Wood's point, and the point I made earlier, he does not like the market going down. He does not like seeing the stocks go down. When they continue to go down, he sees the Dow down 800 or 1,000 points today. He's like, I need to do something. You know, he thinks about that stuff. He does. Don't kid yourself. You know, they say, oh, I don't care about the market. He might say that. He does. He cares. We've seen this before. He cares. So I would not be surprised if he says something like talks, not saying that it's over, the tariffs are over, but just productive talks or something like that. The market would rally significantly on that. So before you sell all your stocks, short the world, just remember Trump's all over the place a bit here. So I think there's more Trump pumps coming. Today's a Trump dump, but don't count out the Trump pump.
All right, that's it for this Monday on PreMarket Prep.